So I was wrong-ish, I guess, last week, although I did predict a 55% risk in the market. And then, let's see, take a look here. This happens. This is how the market closed on Friday. And it was pretty much the same on Thursday also. The market just crashed. Not a crash. I think it's just a little bit of a correction. So that's what we're going to talk about in this episode of Wealth Down, ladies and gentlemen. Welcome to my little financial podcast where I'm revealing my positions, what trades did I make, why I did them, what I bought, why I sold, what I sold, and why I did it. I'm also going to talk about a couple of interesting events, why UnitedHealth plummeted on Friday, why the entire stock market plummeted on the last two trading days. And actually, I was kind of right-ish, but also wrong. And I did raise some cash, and I did do something with that cash because the week started out pretty good, as you can remember. We're also going to talk about HIMSS. Rocket Lab is one of the interesting stocks that we're going to talk about. Also a little bit about Berkshire Hathaway, Nvidia, Broadcom, the technology sector, and also consumer durables and healthcare sector, because there are some interesting things happening which tie into HIMSS and HERS. So because about HIMSS stock. So let's get started. Let's just get started with what happened the last week. Why I think the last week went kind of gaga. So here's the S&P 500 and it went, well, so we started the week on the 17th and then we went up 1, 2, 3 days and then we went down and really down on Friday on the 21st. So let's talk about the week that we had behind us. Everything started pretty good. Didn't have any kind of economic events, exactly as I predicted. Monday, Tuesday started really good. Then Wednesday went, oh my B, I'm going to go up. And then on Thursday it went down. And this is what happened. So nothing really major, but the economy, the US economy does start to show a little bit of weakness, especially for the consumer side. This is why, let's just talk about the last week. So disappointing economic data was one of the factors. Weaker than expected business activity readings contributed to investors' concerns. So one thing is sentiment, okay? So nothing, not the financial data was bad, but expectations or the all-around feel of the market is getting worse. Especially companies like Walmart, which had a weaker than expected guidance, causing a significant drop in the price. We take a look here at Walmart. I just selected from here. There we go. They had a 2.5% drop there, so didn't do that well. First drop it had on the 18th and then the 21st, and then it just went down here. Then the second one was UnitedHealth. So you can see a green candle. Believe you me, it actually went down and then it went up again. They had a major drop in the stock price. Also, I no longer own UnitedHealth, but this looks like a really good buying opportunity. So what did just happen? They reported the Department of Justice has reported investigations into their Medicare billing practices, led by a sharp decline in their share, then of course, and also affected than the other health insurers. Then we also had a bit of interesting data from Academy Technologies, provided a lower than expected 2025 revenue outlook. Then we had all-around concerns from Amazon, which are expecting their freight shipping impact to slow, and that will impact their company, of course, such as all Dominion flights. Now, a broader market concern is that investors' fears regarding the policy uncertainty. We still don't know what the current Trump administration will definitely do. So there are a lot of talks, but I think in April, everything will be much clearer. And also we have a couple of concerns regarding delays in the regulation that provide or that are specific for data center energy providers. Also, we saw a couple of comments from the Commerce Secretary regarding potential taxes on cruise lines. So there we go. Now, a couple of major volatility factor was also that Nvidia, Amazon, and Tesla experienced a decline, which now brings me to my trade, and there is where we're going to go more into details in a couple of these factors and a couple of those companies that I made some trades in. So let's go here. Let's start with trades. So what I bought and sold, didn't keep it for a longer time. One of them was Tesla. Tesla you can see, but TSLA had a major downfall here in the markets, especially, well, it's kind of started since December. It's going down, down, down. But right here where I saw that Tesla is oversold, I bought it, then I sold it. And now the last week, I also did 2 trades. I did it one, let me see, right here on the 18th, and then sold it 2 times on the 19th of February. So I made there a couple of hundred, I believe I made it 500 something euros. And then I lost over 100 euros on Rheinmetall. But that's totally my fault due to the fact that it was already up there in the heavens. And when, you know, the old saying, trees do not grow to heaven. So, yep, it came back down a bit. But I did cut my losses as soon as possible. So I didn't lose too much in that trade. It's still in a pretty bullish buy signal here, but it should turn around. And well, if you don't know, Rheinmetall is the biggest ammunition artillery, and they also produce the Panther tank in Germany. So this is one of the biggest weapon producers from Europe, regarding what happened last week due to talks between Russia and the US, and also the European Union, and whatever is NATO representing in the European Union. Speculations were big that the budget must be raised upon spending on ammunition. So that's why Rheinmetall rose here, and then it fell. And then I kind of bit the bullet here and sold it. So made a bit of money on Tesla, lost a bit of money on Rheinmetall. Of course, going back to Tesla, it is unpredictable. I think Charlie Munger had a really good saying that he was asked, what did he think about Elon Musk and his company Tesla? He says, brilliant man. He wouldn't buy the stock. He also wouldn't short the stock. So be careful with Tesla. All you Tesla holders, congratulations. You still have a very good company here, especially after 2019. But for me, if Elon Musk would only focus on Tesla, it would be a great stock, but he doesn't. So I'm just going to, once again, I don't know what they do. He says it's a technology company. Overall, they sell cars. And if you only take a look at their car sales, they don't sell cars because the sales are going down, down, down. So I'm not going to touch Tesla as a long-term investment. I'm only going to trade it. That's for it for the trades. Now let's take a look at what positions I reduced in my portfolio, and I did reduce a bunch of stuff. So first of all, cash. I reduced my cash position to a 5.86% of the portfolio. I may be looking to invest next week a little bit more in a couple of companies. We're going to come to that just in a couple of seconds. So if we take actually a look back to the heat map, when things look this way, when reasons for things looking this way are unclear or clearish, but it's more sentiment, no specific data out there yet, I would say buy. That's what I did. That's what I'm saying to myself. This is not financial advice. I will never give financial advice. Please consider financial advice wherever you want to buy or sell stock. Stock hold big risk and you can lose all of your money. So going back to my portfolio, going back to positions that I reduced, cash position, I reduced my cash position because I bought a couple of stuff, but I also reduced Eli Lilly. Eli Lilly, one of the big pharma producers out there, also producers of weight loss drugs. I reduced my position to 0.3% of the portfolio. I sold just a tinge to the fact that Eli Lilly is trying to trigger here a sell signal. It's trying to trigger it for a couple of days. They are not going to have any kind of major news events anytime soon. So the next earnings report will be in 68 days. So far out there. No major news expectation from Eli Lilly. But another news did influence this. It influenced Eli Lilly, and it influenced also AbbVie, another company that I reduced my position in due to the fact that it's oversold. It's massively overbought. It's overbought. It's a really good company, also pharma technology company. They make tests. They try to come out with new drugs. I bought AbbVie back here, hold it, reduced it, and here reduced it once more. And I'm currently holding a 1.18% of my portfolio in AbbVie, looking to add back to this position sometime in the future when this is going to go south for them and is going to go down once more. I'm looking to add back to it. Also, take into consideration that Next earnings report in 62 days, but also it's a big dividend stock here with 3.11% yield on a year. It has a 263% payout ratio, so they could cut it and they could actually go to half of it anytime if they want. The next dividend payment will be of $1.64 a share, and it will be, so the X date is 15th of April. Remember, 15th of April means bye-bye, too late. You have to buy it on 14th of April if you want to take part in those dividends, delicious dividends. Okay, AbbVie, great company. I reduced my position in AbbVie, looking to add back to it. Next up, let's go to Brookfield, where I did reduce my position to 1.04% of my portfolio, looking to add back to Brookfield, but Brookfield is currently on a, I don't know what kind of range-bound, bouncy struggle here. They're in this since the 2nd of December, and I'm waiting for a massive pullback, and that is where hopefully I'm going to add back to Brookfield. Brookfield is a great company. I would love to hold more of Brookfield, especially when they announced that they're looking to have a roughly 15% year over year, or a over 50% growth for the next 5 years. So definitely outperformer of the S&P historically looking, because the S&P did do now 2 times in a row a over 20% return, and I don't expect the S&P, so the overall market, to do the 3rd year of the over 20% returns. Okay, next up, I reduced my Procter Gamble position to a 5.24% of the portfolio, which is still above my target level here. It should be around 5%, sorry, around 5%, and I'm currently at 5.24%. But then Procter Gamble just did its thing. It triggered here a massive buy, though it wanted to trigger a sell signal, but they actually did trigger on 14th of February a sell signal, and then on the 7th, I don't know why it's showing here 14th. This should actually be 17th, because the 14th was Friday, and this actually happened on Monday. So I don't know. It's kind of missing the 17th, kind of like the joke with 7, 8, 9. Okay, so reduce my position in Procter & Gamble, looking to see what is going to happen here. If this is going to go south, go down and now on the 5%, I'm going to add back to it. If it's going to go up, I'm going to reduce it once more to 5%. Procter & Gamble, as you know, the biggest seller of the products that we all need: Pampers, Gillette, Palmolive, I believe. A lot of skincare and healthcare, and not healthcare, but skincare, all around care for your body and your home. So definitely a recession company here. Recession not proof. If the recession will happen, everything is going to be reduced, because the all-around consumption will be reduced. But for some companies, it's going to be reduced to null. For some companies, it's going to be reduced by 20%. Procter & Gamble could be one of those that is going to be reduced in that range bound of 30-20%, something like that, because we're not going to stop babies from taking shits, trust me. And also, I'm not going to grow a huge beard. So I'm going to buy diapers for my kids, and Pampers is one of the best diapers out there, especially the pants. Woo! Just have to rip them off, and there it is. And you just have to pull them up, and you're good to go. And that's a huge saver for me as a parent of 2. Also have my wife, which is helping me. Or I help my wife, not the other way around. Okay. And I'm also not going to grow a beard, so I'm going to buy Gillette, one of the best razor companies out there, bought up by Procter & Gamble, so far and so on. So you can see Procter & Gamble is one of those companies that are also always going to run to when there's trouble, and then sell it when there's no more trouble. Also received the dividend from them, 50 euros. Woo! Let's go, Procter & Gamble. Okay, let's move on to what I sold, completely sold. So closed positions, only one, which I'm going to talk about right now. So this is a S&P 500 ETF that it has one of the lowest expense ratios out there, 0.3. Where do you have it? There we go, 0.03% of your entire holdings. You will be taxed or charged upon what you hold. There are other ETFs that are charging you 0.07, 0.12, 0.15, 0.20 something. This is the best ETF you could own for the S&P. So it's kind of mirroring back the S&P 500 for you. Now, if we expect the S&P 500 to have less than this 20% return, so it's not going to be negative, current assessment from me, I do not see why I should hold S&P. I use it to dollar cost average into it when I had future pullbacks that I would buy it in it. But right now I completely sold it. Also, I did sell it in December, or I know where I did the last video talking about this, that I completely sold my S&P 500 position with my ETF. Then I bought it back right here, and I sold it right here, I believe. Again, the argument is I do not see the market here holding this for much longer. And what would you know? It did correct a bit, the market that is. And I'm not going to add back to it. I replaced it with something else, something much, much better, which I should have done for a long time, because this is one of those positions, once again, a dollar cost average into it, and also bought it on a massive dips. But I did replace it with something new, something better. So let's go now to new positions. No, let's first of all talk about added. So I added to a couple of positions. One of them is AMD. On this pullback, why not? Let's just bite the bullet and catch this falling knife, but more AMD. One of these days, what is the thesis behind AMD? Perfectly well-run company, little competition excepting Nvidia, of course, but the company is good. This sell-off does not represent that the company is bad, it just represents that it's not the best. It is in second place, so this is kind of unjustified. But as soon as Nvidia makes the best chips, okay, for AI, but as soon as they're going to catch up, and they will catch up, this is going to explode. So that's my thesis. This is not financial advice. And yes, I am currently down 21.58%. Nvidia is a 6.45% holdings in my portfolio, and I am massively down on this position. But one of those days when tides will turn and Nvidia can fall even far more from this. So it's currently back at pandemic levels, pandemic highs. No, so it can still fall from here 50%. But hey, still a good company. They are going to make video cards. They are going to make chips, processor CPUs and GPUs. We are going to use them. They just brought out a massively good CPU again. I still have high hopes for AMD. Okay, let's go to the next one, which is Chipotle. Added a bit to this on its pullback. Currently, it's oversold on an RSI. Has a massive MACD sell signal triggered here. Chipotle is now currently at 4.15% on my portfolio. Well, on this reduction, it actually reduced, and I raised it just a tinge, with me adding just a bit more to my current position on this massive pullback. Chipotle also announced, check here the news, that they're going to use AI to boost their sales. So Chipotle's CFO, Adam Reimer, knows that the US tariffs on import. Yeah, that's not the news I'm looking for. There was a news that they are going to use AI to increase their sales. There's the news. So Chipotle looks to hire 20,000 workers, and it will use AI to help their sales to the next business year. So pretty good news there. Chipotle massively sold off, because this means that they're going to increase their cost. So let's see what happens. I think the stock is overbought. This sell-off is not justified, and I think we're going to see a major comeback here from Chipotle. So that's why I added just a tinge more to Chipotle. Next up is GE Vernova, one of my favorite stocks here. Massively sold off on, actually no news, except in those comments, as I said back here, that concerns regarding delay in regulations considering data center energy provisions. So because that's what they do, they bid grid systems, they also maintain grid systems. They also had a pretty good project there with Chevron to increase their grid technology. So it actually massively fell. GE Vernova, it has a reduction here. Let's see, 20% or something like that. So I bought and rose my position to 3.32% on my portfolio. I would much rather reduce it than back to 2% of the portfolio. This is really, really dangerous what I'm doing here with GE Vernova. But hey, I have massive confidence that the AI story is not over yet. Okay, let's go to the next one, which is Alphabet. First of all, I made a big mistake on buying my first buying in to my first shares of Alphabet here on the 4th of February. And then it, boom, plummeted, which was exactly the day of their earnings report. Since then, I added to the position, and I'm going to reduce the position as soon as Alphabet is going to go up again. Now it's currently at 5.62% on my portfolio. And let's just be honest here. If you're watching this on YouTube, if you're listening to this on Spotify, I'm still bullish on YouTube and on Google. Google's ChatGPT is not going to replace Google search. Also, they also have their Gemini AI. So please just leave me when I'm telling you. Google is not done. It's one of the best companies out there. And I think it's actually undervalued right now. They also have now a dividend, 0.33% yield on yearly basis. So let me hear your thoughts on this. If Google is still a good buy right here, or should we wait because MACD sell signal is triggered, is not oversold yet. Maybe it's going to go even more down, but I'm long-term bullish on Google. Okay, let's check out new positions that I added, because I added a lot. Woo! Check this out. So let's start up with Hims and Hers. First of all, Hims and Hers had a massive pull. So I already bought and sold Hims and Hers like a crazy person. But they did have a major news report here. Actually, not Hims, although then they reacted. And another stock, or two other stocks, rose on this news. So here's the news. The FDA, which is the U.S. Food and Drug Administration, announced that the shortage of semaglutides drugs, which is Ozempic and Wegovy, has been resolved. Now, this is a significant factor because Hims and Hers has been selling compounded version of these GLP-1 medicines, so weight loss drugs. Now, because this was lifted, Eli Lilly and Novo Nordisk, I have a massive jump in my stock of Novo Nordisk, still negative back there, did have a huge jump in the stock price, especially Novo Nordisk. Now, the impacts of this was that with the shortage resolved, the FDA is expected to take action against companies that are compounding these medicines. Now, this poses a threat to a significant portion of Hims' recent revenue growth, which has been fueled by the sales of the compounded GLP-1 products. Now, this is not completely correct. Now, let's take a look at Hims and Hers. Here's some financials. And right here, we can see also on their website that, well, they have the very first one as lose weight, but they're actually not making most of their money from these drugs. So they also have regrow hair, have longer, not going to say that, have better anxiety pills, get smooth skin. So they do have a wide range of drugs they are massively selling. So their revenue, I don't think that's going to be impacted that much. Also, we're going to come back to Hims and Hers when we're going to talk about the next week's earnings reports, which company is going to report earnings. But I do think or believe here that this sell-off was just triggered because it was massively overbought, first of all. Then we're going to see a, maybe continuation of this sell-off. And this is why I opened a 0.93%. It was 1%, but it did go down after I bought it once more. I opened a small position in Hims once more. And if it's going to go down even more, then I'm going to add even more to it. Still believe this is a really, really good company. So let me hear what you think about Hims and Hers. Should you buy, sell, or just hold the position? Next up, Axon Enterprises. Ooh, I was waiting for this stock to have a major sell-off almost a year. So as soon as I heard about this company, basically what they do, well, they make those little cameras. Let me actually show you their website here. Let's just see them in action. So they do here, yeah. So actually they started with some tasers, but they have AI integrated. They have cameras. They have, well, at the end of the day, they process a lot of data. And they are focused on one single industry, and that is security. Whether it's police, whether it's private security, I love this company. So let's go to the products just a bit and see about what we're talking about here. So they have the Taser series. They have the Axon body. Let me open up the Taser series. Let's take a look at this. Oh my God, this is taking so much to load. Nevertheless, what they do, they offer excellent service and products, and they have a moat, which is immense, around this. due to the fact they're pretty much the only ones on the, actually they're more than on the market, but what these fellows do, they're pretty much the only ones. So cameras, yeah, of course, everyone can make a camera, but then process that data. Take a look this week. Wow. Okay, so police officers, so far and so on. You get the gist there. So security stuff. The taser gun, using it in Counter-Strike. No, I'm just kidding about using it in Counter-Strike. So really cool taser guns right here. Man, this is loading really slow. So they should work a bit on their... I wouldn't like to get one of these in my body. Ugh, nasty stuff. Nasty, nasty stuff. But great at what they do. Take a look at this technology. What else? They also have software, as I said. And that's basically it. So simple to understand company. What do? They offer products and services for security. Yes, products and services for security. And that is why I opened a 3.56% position. My position is currently minus 10.23%, but the position in my portfolio is 3.56%. And still want to add to it. This company looks good. I'm expecting great things from this company. Next up, we have a company that I wasn't really aware of it until last year, and then it caught my attention due to the biggest investor of all times, Warren Buffett, because Berkshire Hathaway just opened on the list, on the last filings, they opened a major position in Constellation Brands. Now, after they had a major sell-off, I thought to myself, hey, this is the time. So what do? Well, they offer a variety of alcoholic beverages. Go to their website very quickly. So let's go to brands. So beer, Modelo, for Americans, most likely a very known company, a very known brand. Also Corona, love this beer, really love this beer. Now they also have wine. So they feature beer, wine. So we have here the Kim Crawford. I love wine. Their spirits, let's see, they offer here Casanova Tequila. Yay, Tequila Sunrise, baby. Mi Campo, Nelson's Green Beer, and where to buy. Let's say, where are these fellows? So they're pretty much not a recession-proof company. People will buy alcohol no matter what the economy looks like. They are going to go to parties, buy alcohol, get drunk. Although the what do they call now, the youth? I don't know. They're more on pills than alcohol. I just think they didn't try alcohol. That's why. Great company, has a huge dividend right now. It's a 5. Let's hear. No, this isn't right. 2. Oh yeah, thinking about another company. 2.23% yield. They already had on 7th of February. So I missed that one. Here. I missed that one. The X date paid up $1.01 per share. They are at 104% and 105% payout ratio. That's a bit too much for my taste, but the company is now back to their pandemic levels. So I would say, for me, it was a buy. Let me hit what you think about the company down in the comment section. Now let's go to the next one, which is Walmart. Walmart, which was the kind of the trigger of last week's sell-off. About a little bit of Walmart. Walmart, excellent company, have a nice dividend here of 0.88% yield year to year. They will have their next payment X date on the 21st of March, and they're currently paying out. The currently payout ratio is 34% of their earnings. So yeah, Walmart was waiting for a possibility to add Walmart back to my portfolio, so that's what I also did. Currently at 1.21% of my portfolio. Next up is JP Morgan, also on their sell-off. Added JP Morgan back to my portfolio, and I'm not going to hold this for too much time. They did have, let's see here, the last 5 years for JP Morgan was as following. If the fan, then JP Morgan will fall, and that is where we're going to buy back JP Morgan, because this is unsustainable what they're doing there. But this is a good trade for me for now. So I'm just Walmart, same thing as JP Morgan. Both of these companies currently, or both of these stocks currently bought them for a trade, but they're exceptionally good companies to hold for the long time, my opinion, of course. Next up, bought myself back into Berkshire Hathaway. I don't think this is the best the best moment to buy Berkshire Hathaway here. This could massively go down. They're trying to trigger here a MACD sell signal, and that will be the great possibility to buy a bit more of Berkshire Hathaway. But what I did do is I switched my S&P 500 ETF for Berkshire Hathaway. Why? Because freaking Berkshire Hathaway. And I don't know why I didn't do this even earlier on. So Berkshire Hathaway, really good performer here on a long term. They do have their ups and downs. The concerns for me were as following. So this is why I didn't buy them back then when I started investing. Well, the founder of Berkshire, not the buyer, because he bought it as a textile company, Warren Buffett and Charlie Munger, both of them extremely old. One of them, well, age got to him, so the Grim Reaper said that, you sir, with 99 years old, come with me. And that was my biggest concern. What will happen if they die? So I saw what happened when Charlie Munger did die to the Berkshire Hathaway stock. I mean, nothing, basically nothing. Now begs the question, what will happen when Warren Buffett dies? The stock will maybe have a pullback, which would be a great buying opportunity in my opinion, and then it's just going to continue on compounding wealth as long as the future management will not necessarily be as smart as Warren Buffett, because Warren Buffett always said you don't have to have a high IQ to make money in the stock market. You just have to be patient and then try to find good companies, hold them forever, blah, 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 blah. Actually, not blah, 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 but that's actually what we should do as investors. This is also why I created Wealth Dom, to look for these opportunities. But right now, the market is telling us be bullish. Now, if that changes, then you should retreat into good companies. In my opinion, good companies, from what I'm holding right now, are actually... this is why I also heard about Constellation Brands, because I was looking for another company back then, Constellation Software. I bought and sold Constellation Software, which again proved out to be a mistake. And I'm looking for, let me just show you Constellation Software. So Constellation and Software, which is a Canadian-based company, a exceptionally well company. Let me show you what happened to this right here. A complete chart here on Constellation Software, and we're going to go back to the beginnings, which was 2006. So just take a look here. What happened to Constellation Software in 2008? So recession, 2008, it hits at the end actually of 2008. So they went down. Let's just take these two drawbacks. 2027 August went down from 27 to $22 a share. Then it rose in 2008. Okay, went down then from 28 to $23 a share. Not a big loss. And since then, we are currently at a whopping $4,840 a share. Never had a split. Really expensive company to hold, and it just kept on going. What do they do? So they did have from 2021 to 2023 a blah blah blah. But which company does not have? You can see a 15 years loss in Microsoft, where Microsoft went basically nowhere for 15 years. But Constellation Software does the following thing. They buy up small software companies. So Constellation Software, Berkshire Hathaway, and Brookfield are three of the major companies that I'm looking for to hold forever. And the reasons are because they're actually exceptionally well-led companies, and they have a big moat around them. Okay, so let me close up here with the positions. We talked about Berkshire Hathaway, Rocket Lab, which is the next UPS as soon as Elon Musk lands on Mars. Well, I don't know what we're going to do on Mars. Just going to land there, chill out for a couple of years, realize it's a big waste of time, burn a lot of money, then come back. No, it's pretty good for the evolution. I'm concerned that I'm not going to be alive when we are going to colonize space. So I see myself as an alien. For the human species will be the species that are going to visit other planets, and nobody's going to visit us excepting bacteria that lives in comets. So Rocket Lab, well, basically that's what they do. the name says it. They build rockets, and they had exceptionally good years right here. Also, they did go down from 2021 to basically nothing along 2023 and then 2024. So this could add really, really badly for me, but I'm not giving up Rocket Lab for now. I am seeing this as a investment, not an investment, trade, trade opportunity. Hopefully it's going to turn out good for me. If not, then I'm going to be in a big minus here because I'm currently 2.75% investment of 4,520 euros, currently down 7.98% in my position. Who knows what the future holds? Let's go to the last position that I opened. My new position in Pepsi. Was looking to add Pepsi back in January, didn't do it. Then Pepsi went up. I said, damn it. And then when Pepsi went down, I said, hey, that's a new possibility, and didn't add to it. So I added here in the peak, most likely will suffer a pullback. Don't worry about that pullback because Pepsi is currently back at its pandemic levels, almost. Yep, it was down here. Close this up. So pre-pandemic levels, even lower than that. Kind of meaning that we are back at square one, and I'm looking for many companies to be in the same position in the future because the money that was the helicopter money ran out. And due to the fact that we're not getting larger as a population of planet Earth, servings per ounce of Pepsi, and they have a lot of brands, Cheetos, I believe also that was bought up by Pepsi, will not raise in consumption, but it will keep consumption constant. Now, said we're going to see that the middle age is rising, so people are living now till 50. Also, we're discovering that US aid is paying people that are over 150 years old. I think might be wrong on that one. Double check that, please. Yeah, but we are going to see consumer stay steady there, although with drugs like Ozempic and we go, something like that. The weight loss drugs do exercise a lot of weight on stocks like Coca-Cola, McDonald's, and Pepsi, although those two are up in the skies once more. I have big hopes for Pepsi. So this is not a fashion brand. It cannot go out of fashion. Could be beaten by Coca-Cola somehow, but they're so large, but of so many companies already that I don't see Pepsi going anywhere from here except up. Let me hear your thoughts. With this being said, let's go to risk assessment for the next week. Going to be a hard one. So the last week I said 55% risk in the market, so chance that something bad is going to happen. Risk is always there in the markets, but let's just go now to risk meter and also open up here S&P. So we had a pull down, not a major one, not a major pull down here. If I would go back here, we just hit the 50-day moving average right here. Like if you're seeing everything correctly. So we hit the 50-day moving average. That's the green line right here, and it stopped. So let's see what Monday brings us. It didn't go underneath the 50-day moving average. So support held. Now, if we go under the 50-day moving average, let's say on Monday, and on Tuesday, again, we're going to go under the 50-day moving average. Then we're going to have our next support, which is the 100-day moving average, which was going to tell us that we are in a bit of a boo-boo. Now, what I expect is a rebound, a reflexive rebound. This is also kind of interesting and also not getting us safe in a safe zone here because it could go up and then it could come back there. So that will be the test. What will happen the entirety of the next week? Will it be bouncy and go down, or going down, bouncy, go up? Or if it pierces the 100-day moving average, then Dorothy, I think we left Kansas because things are going towards the 200-day moving average. And last time we did this was back in August, actually it was July, then the 1st of August, we had that major pullback to the Japanese yen trade. So that was a major pullback. And this could be the next one, but I would say it will not happen exactly as we have it here. So we pierced through the 50-day moving average back in December. We had a next bad day, then we went up, then we went down, up, down, up, down. So this is a really, although last week, and this is where exactly where I sold my S&P 500 ETF on. This is 70, 80, on hump day, was where we saw that we reached a new all-time high for the S&P 500, and then it went boo. Everybody sold everything. Everything went south, and we had the major sell-off here on Friday. So let's see what will happen on Monday. So let's just go back to right here. Let's go back to a risk assessment. So what's the risk? Let's take it step by step. MACD sell triggered. Now we were bouncing around here, so this could lead to a couple of triggered. I would say that the risk now is high. It is triggered, and it has been triggered. Go back here only on Friday. So there's where those two crossed, sellers and buyers. There were more sellers in the market than buyers, meaning prices are coming down. This is a market. It's like going on a market in a market where you have apples, you have bananas, and people are starting to sell apples, and nobody's buying apples, and the price is going down, 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 and then somebody starts saying that, hey, apples are pretty cheap, so I'm going to buy a couple of apples, but I don't like the price, so how about you give me a lower price for those apples? This is exactly what is happening here. The price for apples is coming down, and when buyers are going to come back and buy more apples, going to say, hey, apples are pretty cheap, let's buy more apples, let's stock up on apples, then the market is going to turn around here. For this to happen, we have to, so the first trigger was sentiment. A couple of companies reported that it's not that good. They have not that good of an outlook. But we're going to come to actually earnings next week, and two factors. Let me here cover also earnings for the next week. Let's open up Earnings Hub here, and let's see what kind of companies will report earnings next week. So we already start on Monday with Domino's Pizzas. Then we have HIMSS. We have Realty Income. Now on Tuesday, we have Home Depot, Axon. So all of the companies that I'm prepared to make a huge trade on will report the next week, which if they have good reports and also a good forecast, then on Wednesday, on Hump Day, where we have, okay, loss and so far and so on, Nvidia, Salesforce, and Snowflake reporting earnings, also eBay, the market could rip. If these companies have good forecasts, the market could rip. Also, Vistra Energy, which is one of the companies I'm looking forward to add, and also Rocket Lab. All of these companies, if they see a brighter future, the market will rip, and we're going to go until most probably May, and just have a beautiful run-up into new all-time highs. Why do I think this? Well, because a lot of buybacks were announced. I think we're going to have the most buybacks ever this year. And I also want to point out that mostly companies buy back the most of their shares, historically speaking, at the peak of the market. So I'm prepared here to go into a little bet that we're going to see a massive surge in, because we did have a good correction here the last week. Maybe it's going to Monday before the bell, we're going to see a little bit of sell-off, a little bit of push in the markets. So before the bell, because the markets are opened in Japan, they're going to open in Europe, and then the market is going to open in the US. Maybe it's going to fall down there, and then in the afternoon, prices are going to come back, because after the bell, major companies will report earnings, and that is going to trickle into Tuesday, where this is I hope this happens. This is going to trickle into Tuesday, and then the bulls are going to come out on Wednesday, and we're going to take off from there, because buybacks are coming, massive buybacks are coming. So I would say MACD sales triggered, high risk in the market. Let's add it. RSI is at 45, which I'm going to say that this is, could it go even lower? Yes. I'm between high and medium risk. Let's just say it's a high risk in the market, that this could go even lower. Major companies reporting earnings next week. So earnings, which is a 50-50 chance. I think they're going to not only report good earnings, but also good forecasts. So I'm going to reduce this to medium risk in the market. Then buyback are open, but I think it's going to take the next week, so the last week of February, to really trigger those buybacks. Sorry about that. So medium risk in the market. And I'm going to reassess this the next week, at the end of the next week. Then we have sentiment, which is low. I think it's time to buy. But that's at least what I did. And this is a medium because it could change. So the sentiment was low, it's going to go lower, but it can change. So I would say that it's still a medium risk in the market. And the S&P 500 sold off, so correction, but it's not over. So I'm going to say that this is still a medium risk in the market. I'm going to stop here. Oh, no, one last thing. Let's take a look at economic events, major economic events. So we have the week from 24th of February till the 2nd of March. We have durable goods and we have GDP growth. Ooh, this is going to be interesting. Core PCE, there's the producer and personal income. So this is going to be interesting. It's going to even lead to more sell-off in the market on Friday, on Tuesday and Friday. So I'm going to also say that economic events still represent a high risk in the market. And we're back to 60% risk, almost 61% risk for the next week. Now, I already was wrong-ish. I was right for the first half of the week, where if the last week would have closed as we had it up there, did nothing from Wednesday to Friday, then I would say I was right, but it turned back down. So not that I was right, because it was 55% on a 55% evaluation risk in the market. So I was right-ish, wrong-ish. I don't know what I said, but right now I'm seeing more risk in the market for more sell-off, and I hope that I'm wrong. But after that, I still believe that the market are going to rip and go into the summer with a really, really new all-time high in an S&P. So, ladies and gentlemen, thank you so much for watching. I'm Noble PM. Please hit that like button. It really helps out the channel. Subscribe to the channel. Click the notification bell and get notified when I post new videos like this. Also, take care of your portfolio. Stay safe out there. Catch you next time. Bye-bye. Bye-bye.